getting growth back on track and getting the stakeholders, the government, the industry and civic society to participate in getting things back on track has been the theme at the World Economic Forum. Of course, in the backdrop, you had that Barack Obama victory. And joining me today to discuss all of this are Adi Godrej, chairman of the Godrej Group of Industries, also, of course, the CII president, Kiran Mazumdar-Shaw from Biocon, and, of course, Chris Gopalakrishnan, co-chairman of Infosys. Thank you so much for joining me. Chris, I'm going to start with you because America has been the focus going into today. But really, what does the Obama victory really mean? Because one could argue that towards the last bit of his last tenure, things were getting a little sticky, especially for the IT industry.
So, these are issues that come up during the election. I believe that with President Obama coming back, there is some continuity. And in the second term, I expect that because the environment is different, some of the challenges are different, he would have to act differently. If there is a coming together, and that's a big if actually, if there is a coming together of Republicans and Democrats, because there are severe issues facing the nation, I think all of us will benefit and the responses will be different. To the IT industry, I believe that we need to forget the rhetoric during the election time. I think we have to look at actual pragmatic actions. And in the past, we have seen that this has not impacted the industry. Even during this rhetoric, it has not impacted the industry.
But Mr. Godrej, just one question on the US. Post the election, the big challenges, the fiscal cliff that everybody is talking about. American industries seems to be waiting and watching to find out how taxes are going to go up and what's going to happen on government expenditure. What's the sense you're getting in terms of investments into India? When you talk to companies, when you talk to CEOs, are they holding back, you think?
Well, I think the perception of India has definitely improved after we started the reform process again and after we appointed the Parthasarathy-Shom committee to study the GAR and retrospective provisions, and the recommendations are very good. So perception has improved, and I think US corporations will now want to invest in India.
But you see them actually putting out the outlays, Chris, talking about investment. One investment is the FDI investment. The other is really outsourcing work, etc. I mean, are you seeing pressure out there?
No, on the outsourcing side, we have not seen a difference. We have seen, of course, the impact of the global slowdown, but other than that, there is no difference actually. Things are going on. I believe that, as Adi said, the election is a question, was it unknown, right? I was a question mark. Now that the election is over, if India continues on this path and continues to, talk about reforms, I think investment will happen.
Kiran, there is a global slowdown to talk about, the crisis in Europe, etc. But for India, for the last year and a half, 2 years, the problem has been very internal. And you've been outspoken about what the government needs to do. Are you seeing a change? Because in the last couple of months, you've at least seen some movement in policy. Are you heartened by what you see, or do you think there's a long way to go?
Well, certainly it's heartening because, as you say, this deceleration of growth was self-inflicted. It's just that we didn't have the confidence and the courage to go ahead and push ahead with reforms for, various political reasons. But now that we've actually announced, many reforms and, policy changes, I think what is important is to provide some clarity and, more importantly, how are we going to implement these policies, and I hope we do it with a sense of urgency. Because if there's still going to be ambiguity about what we are saying, and if we don't do it in a timely manner, again that loss of confidence is going to take place. But having said that, I think India has a huge, opportunity to actually leverage a lot that is going for us at this point in time. By doing things the right way, by focusing on, say, unleashing and unlocking the manufacturing sector, by making sure that we take advantage of the IT skills and this whole sector that we've created in such a strong and robust way, by unleashing and unlocking the potential of the pharma sector. Pharma has a very big role to play in the global healthcare industry. For instance, I think Obamacare itself is so dependent on generics. And that augurs very well for Indian industry. So I think all across the board, I think India Inc. has a very, large global opportunity in various markets. Emerging markets are really, really very attractive markets for India. And it's happening. We can see it. Our own business can see that 50% of our business actually now comes from emerging markets. So I think globally there are tremendous opportunities. We have to have the enabling policies. For instance, I think interest rates are still too high. Cost of capital has to come down, because that's how you will kickstart and spur the manufacturing
Mr.
sector.
Godrej, lots of corollary questions to that, but my first question to you is that the talk, you mentioned the Partha-Sarathy-Shom committee, you mentioned that a lot of the retrospective changes, etc., have had a real rethink, but you've also had the first tranche of reforms on FDI in retail, in multi-brand retail, etc. Is it enough? Have you seen the movement on the ground? Because the sense that one is getting is that reforms, everybody seems to be waiting to see how much of it will translate on the ground before putting in money.
No, it's not enough. Much more needs to be done. But the perception has changed. The perception that was there both outside India and in India about investment, about the economy, clearly to my mind has changed. More needs to be done. Now we need to get, for example, the most important reform we now need to go after now is the goods and services tax, because that will be a reform which will have an immediate impact of 1.5 or 2 percentage points to our GDP growth rate, and it can change the dynamics in the entirely. So more definitely needs to be done. Perception has changed, and I agree that the Reserve Bank needs to act, reduce interest rates. Interest rates should be based on inflationary expectations, not on historical inflation. Inflationary expectations are low now. Commodity prices are coming down. Crude oil prices are expected to come down. So I think this is the time for the Reserve Bank to reduce the repo and reverse repo rates.
The other big problem has been investment, Mr. Godrej. Of course, your group of companies are very consumer-facing in that sense, and you've seen a fair bit of traction there. But Indian industry is not investing. There's very little capital investment in key sectors. You've got a lot of infrastructure sectors in a bind. What sense are you getting from CI member companies right now?
No, I think investment has to be accelerated, and partly it is because of the high interest rates. Interest rate reduction will help. But the reform process will lead to more investment, both domestic and international. And I expect investment will pick up now.
Chris, infrastructure has been the big bottleneck. I know IT industry, though it's west looking, it faces the brunt of the infrastructure problems. Have the last 2 years been a serious setback in that?
So we need to, yes, a lot of the projects which got sanctioned have got held up at various stages actually. So there is clearly a need to look at the whole approval process. We have to look at Land Reform Act, and there is of course a bill pending about how land will be acquired for projects and things like that. I think, see, we have to accept that industry requires support, and giving industry support is the way to promote growth, is the way to create growth and jobs. So, and for that, especially for industries like resources and things like that, you have to look at land acquisition. And we have to have a pragmatic policy. We have to sit down together and face up to the challenge and go forward. By not doing it, I think we are holding it back actually. Infrastructure requires reforms.
Serious worries on the land acquisition policy as it's been drafted, Kiran. Also fear that the winter session could be again a lost opportunity. How critical is the next couple of months going to be in that context?
See, in one way it's very key, because I think you need to have very good optics on what's happening in India. So as I said, if you don't implement a lot of these policies and reforms that you've announced, and you're going to waste the session again in deliberations where you have contrarian views coming out from the opposition, it is going to be a blow on on the whole economic opportunity. But having said that, I think the government has to bite the bullet. I think you have to go ahead with these reforms in a very pragmatic way, because I think we need a lot more reforms to kickstart the economy and really give that kind of growth momentum that we're all waiting for. And I think we need to definitely have, with a sense of urgency, invest in infrastructure, because one of the reasons why also investments are getting delayed One is high interest rates and the other is very suboptimal infrastructure. There's no power. I mean, we have basically decided to put up our expansion unit in Malaysia. Why? Because there's not enough power. The interest rates here are very high. So the cost of capital is very, very expensive and not competitive when it comes to other options.
Policy announcements that have been made, Mr. Godrej, have not seen real translation on the ground. Manufacturing policy, classic example. Today there was a lot of discussion around how manufacturing is the real gap that we need to fill to get the jobs in place. Do you think that has been too slow for India and a far more focused approach is needed there?
No, some of these announcements clearly cannot be implemented overnight.
Sure, but
they
has
need
there
time
been
to be
adequate
implemented.
traction?
I think there is movement. I think Anand Sharma is working on the manufacturing policy being rolled out. Several steps like the Mumbai-Delhi industrial corridor, etc. There's the talk of announcing further industrial corridors in the south, and I think that will go ahead. These are not policies that will have immediate impact,
Sure.
some of them. But the fact that they are announcing the policies itself creates a much better perception. And I think the 2 or 3 important things are some of these reforms, 1 or 2 of the pending bills. I think GST, direct tax code, the companies bill.
Labour reforms.
Yes, if they are passed in Parliament. And I think the worst thing would be if, again, the Parliament session does not take place. I think it's totally wrong of the opposition to boycott Parliament. Whatever differences they have, to my mind, they should discuss it in Parliament, debate it in Parliament and then take a decision. But boycotting Parliament, to my mind, is not a good thing for either the Indian democracy or the Indian economy.
Chris, a lot of investment is stuck, and I'm talking about the old economy because, through CII, you are actually dealing with a far wider range of industry. Are Indian companies ready to bet on this government, on growth, at a time when pretty much all the goalposts have been changed in a lot of the key sectors like infrastructure, a lot of the key investments? Is there apprehension right now?
See, we are all in it together, right? Indian industry is committed to India. Yes, we will look at options outside, but by and large, we have huge investments here. We are committed to India, and so we have to work together. I don't see this as
But
one
are
side
they
versus
putting it on the table right now? Are they going to say that let's wait for 6 months, 8 months before we actually do that?
I think there's a lot of let's say regulations and reforms on the table. I think as Adi said, if we can come together, discuss, debate, and sometimes you don't get what you want. That is, when I say you don't means opposition. But in a democracy, if we discuss, debate, and there's an vote taken, we have to go forward. We have to go to the next issue. We can't just go back to the same thing again and again. I think we have to figure out how to make this work. See, I strongly believe that without politicians, without politics, democracy will not work. So we have to include them and we have to be part of that system. And what is needed is a way for us to accept that we will win some, we lose some and go forward. That's what is needed.
Is investment getting back on track, Mr. Godrej, across
Yeah, I think
companies, in
I
infrastructure,
expect
in key
it will
areas?
accelerate now. It was decelerating, the investment rate. I think it will accelerate. GDP growth rate was decelerating. As you know, last year in the first half, we had a reasonably good growth rate. The second half slowed down. This year we've had a poor growth rate in the first half. I think the second half will be better. First of all, the base effect will come into play. And I think perceptions are improving. So I think both investments and GDP growth will accelerate.
Kiran, would you look at investing, if you were to look at CapEx, I mean, you spoke about a center in Malaysia, would you actually invest in growth over here? Because a lot of people have said that their horizons have shifted. Because what's happened is that, nobody's really looking at a 5 to 10 year horizon anymore. It's more because of the crisis that we've gone through as an economy and the global crisis. Everybody's looking at shorter tenors.
No, I think just to carry on with what Chris said, I think we have hugely invested in India. So there's no way of not investing in India.
Further investments.
But I'm saying, of course, we are committed to investing in India. I think we are investing every year. Year on year, we are increasing our investments. But I think what I am seeing is that business confidence is returning. And I think there is clear optics that, government does mean business. And I think if we can just see some of these rollouts of reforms, then it just gives you that much more confidence. I think you need to see clarity in policy, business continuity in terms of the reforms and policies, and you do need enablers. You know, like we do need to address some of these enablers that will kickstart investment. And I'm beginning to see some good signs of that happening. But as far as we're concerned, of course, we remain invested and we will continue to invest in India.
Just to, Mini, just to explain, say in our group, we have at least 20 projects going on currently. 15 of them in our real estate development company and about 5 in our manufacturing businesses. So I think many companies are investing.
Okay. Last set of questions on the growth, as you see. Is the worst over, Mr. Godrej? Because there was a time, about 4, 5, 6 months back, when the mood was bad, all the metrics were bad, all the rating agencies were downgrading us. Have we crossed over that?
Yeah, I think the worst is over. I think this 5.5% quarterly growth rate is probably the lowest we will see in the near future. And I think the opportunity for much higher growth, and if we get our act right, one way I welcome these serious problems because it has got the country thinking, it has got the government thinking, it's got business thinking, and I think now we should plan for double-digit growth over the next decade.
Chris, on the world stage, are things looking easier, or is that a different cup of tea?
So on the world stage, US is starting to recover, and I think the uncertainty over the election is over. So I feel that is actually better, because the uncertainty is over. So I believe the world stage, you will see improvement, and India will also see improvement. I think it's positive. China will also see the uncertainty about the leadership change over. So I'm actually optimistic at this point.
Kiran, you meet a lot of people who are looking at investing in India, who talk about India. What's the biggest fear in their mind, and what's the biggest reason for optimism that you picked up?
Well, I think India, for them, is a very important investment opportunity. And I think they were waiting to see some kind of positive announcements being made in some of these reform areas. I think they are going to make sure that they approach a cautious investment kind of approach. But other than that, I think the optics are right. I think the government and India Inc. is also really focused on making sure that it continues to become a very important and attractive investment destination. I think India Inc. certainly believes in making sure that it gets into these very strong partnerships and JVs with overseas corporations. So I think that's also going to see some investment coming in through that route. But overall, I think the optics are improving, and it's for us to lose. So I think everyone has to make sure that they've learned a very bitter lesson from what's happened in the last 12 months. And I think government is in a state of readiness and preparedness to make sure it moves ahead in the right direction. India Inc. certainly is pushing the government to do this.
Okay.
So I think it's
last
good
question.
News.
Optics have improved, sentiment has improved, investment is likely to improve. But what are the 2-3 things that the government can do right now to really change the tide?
Well, I think the most important thing, it's not just the government, but government should work with the opposition in the states to get the goods and services tax. To my mind, it's the most important reform after 1991. So that's the most important thing that needs to be paid attention to make a huge difference. And then, of course, the government needs to take the whole reform process executed rapidly. They formed this committee which is going to look into the large projects. All that needs to be executed well. See, the ideas have come out. I think execution is very important. One of the problems in our country is we think reasonably well in many cases. It fails sometimes at the execution level.
And it's going to get down to that, to rolling up your sleeves and getting down to work. Thank you so much for joining me today.
Good talking to you.
Thank you. A lot of the focus at the World Economic Forum here in New Delhi has been about getting India back on track, and nowhere is it more palpable than real investments on the ground. Joining me today is Neeraj Bharadwaj from Carlyle. Neeraj, thanks so much for joining us. A lot of talk. Are you convinced with the sentiment having turned after the announcements of reforms, or do you think it's just talk right now?
I think it's a start, which is a good place. I think with our backs to the wall, the government has actually done something. I don't think it's turned the sentiment around. It's brought us time. So when you look at FDI, when you look at potentially the state electricity board restructuring, which is being talked about, I think has brought us time. But the real issues are around physical consolidation and increasing the investment in infrastructure. And I think that's where sort of the rubber meets the road.
In the post-budget, there were two big concerns in India, and I'll put it into two buckets, Neeraj. One was the retrospective amendments that were proposed, and the other was the complete, stalling of infrastructure projects and the crisis in key sectors like power.
Sure.
Both have been addressed in some way. So let's take each. As an investor into India, from Carlyle's point of view, are you convinced of the fact that those retrospective steps won't be taken, that there will be more clarity on GAR, and are you convinced about it?
I think in India, as we've all discovered, it's all about implementation. So I think the Shom Committee report is obviously a step in the right direction. Now, the implementation of that is getting delayed a bit. The finance ministry has to approve it, has to get enacted. But if I think that goes through, that gives a lot of comfort from an investor perspective around that. And then I think broadly on the tax side, also GST and DTC need to get the direct tax would also need to get implemented, and I think that will help broadly with the concerns investors have around on the tax regime.
On the other side, infrastructure clearance, because we heard a lot on power reforms, we've not seen that. So as an investor, would you even put money there?
So I think there are two parts to that. I think, firstly, from a private equity perspective specifically, infrastructure is a significant multiplier to growth, right? I mean, India is underinvested on any dimension, right? 10% peak power deficit, 1/3 per capita roads compared to Indonesia. So from an investor perspective, that really needs to be solved to get the multiplier growth back into India, right? I mean, there's some estimates that if you get the infrastructure spend up to about 400 billion, as is per the Planning Commission, then you can get 8 to 10% direct contribution to GDP and another 8 to 10% through total factor productivity. Now, to have that, I think, the National Investment Board is a step in the right direction. I think you need to fast-track certain projects. You need to get the land acquisition bill passed through. I think the challenge in all of these is because you require parliamentary approval, given sort of the tenuous coalition situation right now. It'll be a true test, but I think that's what is required.
Would a private equity firm like yours look at infrastructure right now?
No, we do.
Power?
We do. We actually look at infrastructure for two reasons. One is that there's obviously a clear demand for power. Secondly, people actually need a lot of capital in those sectors. So from a big private equity perspective, a big fund perspective, it's a sector to invest in. And third, the people who are rising above the noise right now are really promoters you can back with very clean corporate governance. So we are looking actively at the sector. We are very careful, obviously.
So have you invested any money in
No, not as yet. We've looked at a number of deals.
You exited from HDFC, and it created headlines also because you got a pretty decent payout from the investment that you did. You made a lot of other investments around 2006, 2007, India Infoline, InfoEdge, all of these companies.
Yeah.
What's the plan out there? How long are you willing to stay on, and when will you be looking at exits?
Sure. So we've got two funds in India. We have the buyout fund, which actually does large growth capital transactions in India, and then we've got which I'm part of, and then we have a fund which does smaller growth transactions. I think as in any investment, we look at a 5 to 7 year exit horizon. Carlyle is a massive fund, so we manage about 160 billion across our different asset classes. So the good thing is we're not under pressure to exit any particular investment. And so we try to make decisions which are aligned with the promoter as to when we can exit. But it's about creating value in the companies, making sure we get a good return for our investors. And obviously, you always want to be opportunistic. So if you get a great market environment, you look to exit at that point in time.
160 billions in funds, and you've just put 1 billion in India. So that's really slow. I mean, which is your biggest investment destination right now, globally?
So I think we've got different geographic funds. So obviously, our U.S. buyout fund, which is the flagship fund for Carlyle, is going to be raising a $10 billion fund, if not larger. So we obviously put a lot more money there. We put a lot of money in China. We're looking to do a lot more in India, frankly. If you look at, forget the the history of India and private equity. If you look forward over the next 5 to 7 years, I think India will attract a lot more private equity. I think the growth drivers in terms of domestic consumption and hopefully, as you said earlier, infrastructure investment increasing are very positive. And at the same time, this is a hugely underpenetrated private equity category here, right? It's a fraction of GDP compared to other geographies. So I think we'll be investing a lot more in India.